This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to the channel. For those of you that are new, I have been providing stock research and consulting for the past 30 years. I use technical analysis to complement the fundamentals. I don't look at fundamentals at all. I just look at the technical side. But the institutional clients that I've worked with for the past 30 years are very good on that side. So I give an unbiased opinion of what I am thinking on the technical side to help improve their timing. And so what I've been trying to do on this channel for the past year or so is give some insights into some of the things that I look at. One of the things that is important that I don't talk about very much is the fib levels. And the thing is that I use the fib levels, and a lot of times I don't even draw them because I'm just visualizing kind of where the range is. To me, it's not an exact point. While they do work sometimes to the penny, I think if you use them the way I do, I think it'll complement what you're doing or what we're doing with respect to price structure, with respect to the moving averages and the momentum. And so I'm going to show you kind of what I'm looking at when it comes to a confluence of using this fib retracement tool. So let's go ahead and get into this. So I want to use the XLK for this example. And I actually want to show you how I would go about looking at this and really kind of evaluating the overall pattern, just like I typically do, using price, using the moving averages, using the momentum, but at the same time being able to look at the fib levels, and sometimes it can give us some really nice details. So I'm going to start with a monthly chart. And what I like to do when I'm using the fib retracement tool, I mean, yes, you kind of want to know what's going on in these big drops. So in other words, I could go and do a retracement from there. But I actually like to get a little bit more sensitive. And the way I typically do it is I'll look at the last real decent bottom. And the reason why I want to do that is because I want to know whether this is holding this range between the 382 and the 618. If we move up based on one leg, just the last leg, and the retracement can hold, especially hold the 50% level like this did on the monthly chart. We can see we came down right about to this 50% retracement and got a rally. Then that's typically a pretty decent sign from this standpoint, using the fibs in conjunction with the moving averages. You notice how we broke the moving average just barely, but we came right into this 50% retracement. Now, I think if you hold the 382, then you're in a very, very strong trend. Because if you hold 382, most of the time you're going to go back to a new high. If you hold the 50% retracement, then you are in a solid trend, and the probabilities are that you are going to continue to the upside. If you come all the way down to the 618, then I'm sort of thinking that, yeah, the trend is still, the bias is still to the upside, but you have lost a little momentum, and it probably isn't going to go straight to new highs. It's probably going to channel a little bit before it can work higher. If we break the 618, then I'm sort of thinking, yes, we could rally, but the trend is shifting to the downside. So that's kind of like my basic premise. And we can see we've lost a little momentum on the monthly based on the MACD rolling over. This is pulling back. We're in a downward sloping ADX environment where green and red are coming together. But I view this more as a contraction or a consolidation pattern rather than something overly negative. So that's kind of how I'm reading the monthly chart for the XLK. The 50% retracement on the fib is telling me that this is actually still okay. Now, what I want to do from here is evaluate the rally. And the way I would do that is continue to go down a time frame. So now let's look at the weekly chart. So now we want to take a look at the retracement from the high and go down to the low and figure out what this retracement did. So the retracement was actually pretty strong. If you notice, we got through the 18-week for a short period, but also notice that we reached the 618 retracement. So if I see that, then I'm starting to think that this rally was pretty good. If we would have failed right at the 50% retracement or failed right at the 38% retracement, then these lows are really in jeopardy. Okay. Like, in other words, you could just rally up and go straight down through those lows. But I think this rally was strong enough now where I wouldn't necessarily be expecting a straight down move. Instead, I would be thinking maybe we do something like this. Now, we could ultimately break down, but we could also do something along these lines. So, or we could just come down one time and go straight back up. So, you have to realize that I think hitting this 618 in conjunction to where the 18 was here. So we're still holding the downtrend. I mean, we still have a declining 18-week. MACD is kind of trying to turn at the zero line, but this negative action in the ADX is telling me that a straight up move is probably not in the cards. The fact that we reacted at the 618 sort of tells me that this is going to take a little bit of time, probably channel a little bit, but the push off the low was pretty good. So what do we want to do from here? What we want to do now is evaluate this rally. And now we're pulling back. So the way I'm going to do that, I'm going to go to the daily chart. So now I want to put the retracement tool on the last leg. Okay. I'm going to summarize this once we get through this. But so now we've made this move up. And now what am I thinking? Well, what I'm thinking is that there's a very high probability we're going to want to come down between the 382 and the 618, okay? Based on where the moving averages are, I would think the highest probability is the 318 or the 50% retracement. If we come down to the 618, then this pattern has weakened pretty dramatically because we're going to be well below the 18 and the 40 by the time that happens. So do you see how we use the moving averages in conjunction with the fibs? So if this whole grid was right at, or let's say the 618 was where the 50% retracement was, and this is the 50% retracement, and this is the 38% retracement, then I'd be thinking we're probably only going to come down right to the 18 and then turn back to the upside. But in this case, we have to sit here and watch, and I think it's a lot more sense. So what the fib levels are doing for me is it's allowing me to be a little bit more sensitive to what's going on. If we retrace just to the 382 and we hold the 18-day, and we turn from there, then you got to start thinking we're probably going to another new high here. If we retrace and we get to the 50% retracement, then this is still a pretty solid up move and pullback, and we're probably going to at least go back and test the high. And maybe even try another marginal new high. But certainly the bias is still to the upside. If we break the 50% retracement, now we come down to the 618. Now we've kind of busted through the 382, the 50%, but we've also broken the 18 and the 40. So this is the confluence that I'm talking about. Now, one thing that I haven't mentioned so far are price levels. So we want to look at the price levels as well. And you want to kind of just draw in these horizontal lines at these key levels. And if you notice, we've kind of got two spots. One is this last peak before we pulled back. And so that lines up with the 382. So we're building up a case now if the 18 rallies up. So I want you to think about it this way. If the 18 comes up here, price pulls back a little more. Now we have three pieces of evidence. We've got price, we've got the moving average, and we have the 38% retracement. I mean, that's a pretty key level to be watching. And I got to tell you, what I would do at this point right here is go down to the hourly chart and look for an opposing trend trigger to the upside. Now, if it never shows up, then the likelihood is we're breaking and we're coming down to the 50% retracement. Now, this isn't a high probability setup because if the 18 is here and the 40 is up here and we come down here, this is the only line of defense this has because we really don't have a good price level that we can use. So we'd only have one of the three things that I look for. So I like to look at moving average, price, and the fib. If we get all three, then we have an area of confluence that I want to play. Okay, I want to be looking to play. That doesn't mean you buy the moment it hits those lines. You wait for a trigger on the lower time frame, just like we've been talking about for the last couple of years. Now, I do like to have improvement in here. I mean, this is pretty good green DI, and the MACD is acting pretty well. So I think this time frame is good enough. Now we go down to the lower time frame, use the MACD and the ADX for your timing, or to help with the timing, and look for that opposing trend trigger in the form of a 1, 2, 3. Or the moving average environment where you go in the zone, come out, and then break through the 18 and the 40 to the upside. So those are the kinds of things that I think you want to be doing. But I wanted to make it clear that as I look at this and I look at these 3 time frames, I'm sort of thinking, okay, the bigger picture is actually okay in the tech land, surprisingly, as far as this drop. Now, you have to realize this index is biased to the higher names, the stronger names. Stocks like Google, stocks like Amazon, stocks like Microsoft and Apple. And really, Amazon's the only one that really broke down here, but it's gotten a pretty good snapback of those big names. So when you think about it in those terms, it's not really telling you all the damage that was done to some of the smaller guys, the Twitters of the world and all these software companies that got crushed. But when you look at it in these terms, looking at the XLK, this is still in pretty good shape because I think you've held the 50% retracement pretty well. Now, the rally was actually pretty good because you got all the way up to the 618. That tells me that the likelihood of a straight down move, where we could just come down and just slice through 140, I think is pretty low, just based on what's taken place. Now, I just want to do this for a second. If I take off the fib level, you could argue that you could rally up here and you could say, man, you know what? This is failing at the 18. I mean, this could really be in trouble. But when I throw the fib grid up, and I can kind of see it, and this is why sometimes I don't even put it up there. I can kind of see, okay, this does look like it overran the 50% a little bit. I can just see it by eyeballing it. But I've been doing this for years, so you kind of want to make sure for now you're drawing it in and looking at those levels because that range is important. But where you land inside that range between the 382 and the 618, I think is extremely important. So we've got a pretty good looking longer term trend still in place right now. We've got a pretty decent retracement off the low that's telling us that a move straight down to new lows is probably not in the cards, I don't think. I mean, you always keep that open as a possibility, and that's why we go down to the lower time frames and see if there's violence to the decline. And if we come slicing down through and we hit this lower support level instead of holding the 618, then you're going to get a little bounce, and then this is going to fall through the cracks to the downside. We're going to take out this 141 level to the downside. So I like to use all of these in conjunction together. Find confluence with the moving average, with the price levels, as well as the fib levels. So watch this pullback in XLK and see how this plays out. I mean, I think if it's a big move to the downside, then this is going to probably channel for a while. If it's modest and if it holds these 3 levels, then we're going to another new high here. So anyway, hope this was helpful. Now, what you want to be able to do is apply this to any individual stocks that you're looking at, and it really helps with the pullback trade. So if I'm looking to play a pullback trade, I want to use the fib level, the price level, and the moving averages to find me areas of confluence to play to the upside. Hope this helped. Go ahead and post any comments or questions. Thanks.